Every single day, Americans throw out an average of 4.5 pounds of trash per person. Multiply that number times 330 million people, and you get a mountain of trash. Dealing with this amount of waste is one of the biggest challenges we face as a society. And there's one company that has absolutely solved that problem, cornered the market, and successfully turned seemingly worthless garbage into a gold mine. That company is Waste Management. In this video, we'll be exploring the history of waste management and how they took an industry which was a total mess, both literally and operationally, standardized operations, and turned it into a $95 billion empire that doesn't just collect trash and operate landfills, but is also currently at the cutting edge of renewable energy and sustainability, and is playing a major role in the future of American energy initiatives. So let's first go over the backstory of Waste Management. The inception of the company goes back to 1968. That was the year the company was founded by a Florida man named Wayne Huizenga, along with his two partners, Dean Buntrock and Larry Beck. Before starting the company in 1968, Wayne had been running a single garbage truck route in South Florida. In 1962, at age 25, Wayne had bought a used garbage truck for $5,000 on a loan from his father, and he began hauling trash in Fort Lauderdale, Florida. Even from the beginning, Wayne had a strategy. His idea was pretty simple. It was to consolidate a fragmented and messy industry under one streamlined company. Over the next few years, he began buying small, family-owned waste hauling companies and consolidating them. His method was straightforward and scalable. He began approaching mom-and-pop haulers with existing routes and offering them buyouts. He would then rebrand and consolidate operations, creating tighter, more efficient routes, lowered costs, and saved time. By 1968, he had bought over 100 waste hauling businesses in southern Florida alone, operating under the name Southern Sanitation. It was in 1968 that things got serious for Wayne's growing business. That year was a pivotal moment when his small state operation became a national company. Wayne and his two business partners, Dean Buntrock and Larry Beck, all came from different backgrounds and from different regions. And using each of their unique skills, they aligned their operations to create one national waste company. Wayne was based in Florida, and he was a master of operational efficiency, so he would focus on the southern US. Dean Buntrock had a business named Ace Scavenger Services based out of Chicago, originally inherited from his stepfather, and he saw the potential to consolidate waste management services in the Midwestern states. With a strong background in finances, he brought financial acumen and a big picture view of capital markets to the team. He would later become CEO of the company. Larry Beck had began his career as a truck driver, and eventually he became the owner-operator of a small waste management company in Wisconsin. His strengths lied in operations, and he would help bring regional coverage to the business. In 1968, the three entrepreneurs merged their companies under one banner called Waste Management Incorporated. It was a roll-up strategy made formal. Instead of operating individually, they consolidated their operations, pooling resources, trucks, clients, and drivers. Wayne handled the operations and expansion in the Southeast, Buntrock focused on executive leadership and finance, and Beck helped cover parts of the upper Midwest. Operationally, the business was ready to go, and now it was time to step on the gas. Over the next 3 years, what followed was rapid pre-IPO growth, during which the company went from a regional merger to a national, full-scale juggernaut. Waste Management wasn't just a bigger trash company, it was an acquisition machine. The three founders each handled different regions and responsibilities, and the company scaled fast using the following playbook. They would identify local, small, usually family-owned trash hauling businesses, buy them out, typically acquiring their trucks, routes, and sometimes landfills, standardize the operations by rebranding, consolidating billing, and reducing redundancy. And they would repeat this over and over. At their peak, they were acquiring 1 to 2 companies per week. By 1971, Waste Management had purchased over 100 companies since their merger just 3 years prior. The rapid roll-up gave them a recognizable name, national presence, and most importantly, operational leverage. They didn't just expand bigger, but they did it smart. Routes were optimized, landfills were expanded, and expenses were distributed across a larger and growing base. In 1971, 3 years after the merger, Waste Management went public on the New York Stock Exchange. The IPO would fuel growth even faster. They gained access to capital and public credibility. Within just a few years of going public, they had operations in dozens of states, they owned hundreds of landfills, and they became the largest waste services provider in America. After going public, Waste Management used its new access to capital to grow even faster, acquiring even more trash hauling businesses, but now nationwide. They began buying landfills and not just trash hauling businesses. This would give them operational vertical integration, owning the dumping grounds that they would use for their hauling businesses. They also expanded into hazardous and medical waste disposals, which were higher margin and more regulated sectors. And by the 1980s, Waste Management was the biggest waste management company in the world. Garbage collection might not seem glamorous, but the waste services industry is one of the most recession-resistant, stable sectors of the economy. At first glance, it's really straightforward. Trash gets picked up, and then trash gets dumped. But under the seemingly simple business model is a massive, slow-moving machine that's nearly impossible for competitors to disrupt. There's a few main factors that heavily insulate the waste management industry. The first is the high barrier to entry. Starting a new landfill is not like opening a restaurant. It takes years of permits and millions in capital and the potential resistance of surrounding communities. The second is local government regulatory capture. Cities, counties, and states often signed long-term exclusive contracts with trash haulers, often lasting 5 to 10 years or more. Once you're in, you're entrenched, and that makes customer churn really low. And even when the contract is up, regulatory bodies have very little incentive to change service providers. The third is the capital-intensive nature of the business. Trash collection is not a business that you can run lean. It requires thousands of trucks, transfer stations, landfills, mechanics, and fuel. This typically scares off smaller players and allows the big players to stay on top quite easily. Finally, there's the ever-present demand for the service. Trash production, and therefore collection, never stops. Whether the economy's up or down, people are always producing trash. It's one of the few industries on Earth where demand is indefinitely guaranteed. It's a true application of the one man's trash is another man's treasure mantra. And Waste Management is the king of this dirty business. In 2024, the company pulled in nearly $22 billion in revenue. The national operation employs nearly 50,000 people and serves 21 million customers across the US and Canada. And unlike a lot of industries which have pretty volatile income, Waste Management's income comes from very stable sources. Contracted municipal waste services, industrial and commercial partnerships, and increasingly, sustainability and energy recovery, an aspect of the business which we're going to explore later on in the video. These are reoccurring revenue streams, often locked in for years. This gives Waste Management a level of predictability and financial resilience that's really rare in the business world. And while many might think of it as just garbage trucks and dumpster trucks, Waste Management real resilience comes from their vertical integration, end to end, from curbside pickup all the way to the landfill. At its core, Waste Management is a vertically integrated logistics and infrastructure empire, owning nearly every piece of the value chain. So let's break down their various revenue streams to see exactly how they turn garbage into gold. The first is their core aspect and most visible part of their business, collection services, accounting for nearly 60% of their revenue. The trucks pick up garbage from homes, apartment complexes, offices, factories, and construction sites. These are typically multi-year contracts with high-value customers such as cities and businesses that almost guarantee recurring revenue. Thanks to route optimizations in dense service zones, this portion of the business thrives with economies of scale. The more stops they can fit in per mile, the higher the margin. The second is landfill ownership and operation, representing around 27% of the income. Although it's a smaller portion of the revenue, this is where Waste Management's real power lies. They own and operate 250 landfills across the US, making them the largest landfill owner in North America. Most trash haulers, when they collect trash, they have to pay fees to dump at the landfill. Waste Management owns those landfills. That means they avoid those fees and they get to pass them on to other companies that dump at their landfills. They essentially own the end of the pipeline. This gives them pricing control and ensures high margin revenue. Owning landfills creates a natural monopoly. There's limited physical space, massive regulatory hurdles, and once you're in, you're nearly impossible to displace. Their next biggest stream of income is their ever-growing recycling operations. Waste Management operates 100 recycling facilities across North America, processing glass, cardboard, paper, plastic, and more. This aspect of their business is tied to commodity markets. When prices for materials such as aluminum and cardboard are high, their margins increase. And when prices drop, so do the margins. The profit from this aspect of their business is least in their control, primarily due to the massive labor costs required in sorting materials and processing contaminated materials. In fact, they often pay more to process materials than they make from the profit of selling off those processed materials. Interestingly, despite historically being less profitable than landfilling, recycling is one of the most strategically valuable aspects to their business and will be in the coming years. With so much trash being produced daily, Waste Management expects recycling to grow steadily over the next decade, and they're preparing for it. They're targeting higher margins through automation and tighter input. They see it as a customer acquisition and retention model, especially in sustainability-focused markets. Finally, their smallest income generator, but the one with the most future potential. What a lot of people don't realize is that landfills aren't just burial grounds for garbage, they're massive energy farms. When organic waste, like food, paper, and yard debris, decays in these landfills, it produces massive amounts of methane. Instead of letting it escape into the atmosphere, Waste Management is harnessing this methane and converting it into renewable natural gas. Using a network of gas wells and high-tech purification systems, they capture methane from the organic decomposed material and convert it into renewable natural gas, or RNG. RNG is chemically identical to fossil natural gas and is derived from biological decomposition. Waste Management captures the RNG, refines it, and then sells it to industrial and energy customers. And my favorite aspect of this business is that they use their own renewable natural gas to power their fleet of RNG-powered trucks. Thus, RNG transfers landfills from cost centers into revenue-generating assets. This positions Waste Management as an energy company, not just a trash hauling business. It's truly a full-circle operation, pretty genius if you ask me. Currently, Waste Management operates 16 RNG plants and has the plans to expand to dozens more. By 2026, the company has plans to produce enough RNG fuel to power 70% of its 10,000 truck fleet. And financially, the RNG business is growing, producing $91 million in revenue in Q1 of 2024, up 31% year over year. And RNG margins are significantly higher than typical landfilling and recycling, so it makes it a win for everyone involved. With current regulatory tailwinds, rising gas prices, and infrastructure already in place, Waste Management is converting trash into one of the most valuable commodities on Earth, energy. In a business world chasing disruption, viral AI apps, and digital gold rushes, Waste Management turned their attention to something not so sexy, but really needed by society. And along the way, they happened to build a $95 billion empire by doing so. It's not flashy, it's not digital, but it's essential. No matter where the economy goes or how society evolves, the trash still needs to be taken out. And by owning the systems behind that, Waste Management has quietly become one of the most powerful and essential companies in America. Thank you for watching Heavy Signal. My name is Nick. If you're interested in seeing more business-related content like this, definitely consider subscribing. Thanks for watching, and I'll see you in the next video. Bye-bye.